Kia ora and welcome to Friday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston and this is the international edition from interest.co.nz, and today we lead with news the US dollar is being marked down as demand for precious metal hedges rises. But first in the US, there were 260,000 initial jobless claims last week, down 71,000 from the prior week, and a marginally smaller change than the 73,000 fall seasonal factors would have expected. There are now 2.21 million people on these benefits, marginally less than the 2.24 million a year ago. 2 years ago, pre-Trump, there were 1.75 million people on these benefits at this time. US real personal income rose 1% in November from the same month a year ago. On this inflation-adjusted basis, it has been flat since April 2025. But real personal consumption expenditures rose 2.6% on an inflation-adjusted basis. This is the same pace of rise that started in April 2021. It has been driven recently by services and non-durable goods. While the PCE data is still within the Fed's inflation band, the income drag will be worrying policymakers. The spending rise can't be maintained. And the latest regional Fed factory survey, this one from the Kansas City Fed, shows no improvement from its Dow base. It is still negative. Malaysia's central bank reviewed its monetary policy and related policy rate overnight and made no change to its 2.75% level. They have a strong economic expansion underway and inflation is low there. And Japan's exports rose 5.1% in December from the same month a year ago, the fourth monthly increase, and reaching a record value. As good as that was, analysts had expected a rise of 6.1%. Imports climbed 5.3% on the same basis, the fastest pace in 11 months, and much faster than November's 1.3% rise. The EU's consumer sentiment survey for January was marginally better, well, that is less worse, than for December, again. This continues the slow grinding improvement from its depths in September 2022 and halving that negative level. But it is still negative at double the negative pre-pandemic level. Still, it is on an improved trajectory and is in sharp contrast to the US, where the similar University of Michigan survey is now deeply negative, with the recent deterioration and half the level it was pre-pandemic. In Australia, the labour market performed well in December. Employment increased by 65,000 in the month to 14.65 million, with full-time employment up 54,800 and part-time employment up 10,400. Hours worked rose. As a consequence, their jobless rate fell to 4.1%, well below the 4.3% of the prior month and the expected 4.4%. This probably ends any chance of a rate cut in early February and brings forward the chance of a rate hike in 2026. Everything now depends on next week's CPI outcome, where there is upside risk to November's 3.4% CPI rate now. And staying in Australia, job ad portal Seek is saying their platform shows job ads dropped 1.2% in December from November and are down 3.5% from the same month a year ago. Applications per job ad fell 0.3% in December, demonstrating a slightly sharper year-end decline in candidate activity than usual. An Australian unicorn Air Wallets is to be investigated by their money laundering regulator AUSTRAC. They suspect serious non-compliance by the global payments platform, specialising in moving money internationally for dodgy clients. And we should probably note that the Trump administration has advanced its role in granting licenses to mine the seabed in international waters. It is currently mapping resources off Samoa and has granted its first license to mine in international waters to a US miner. The US only recognises a 12-mile country claim, so vast areas are now open to grant permits for their firms to mine. There is potential trouble ahead on jurisdictional issues. Global container freight rates fell 10% last week from the prior week to be 43% below year-ago levels. Bulk cargo rates rose 16% in the past week to be double year-ago levels. The US Treasury 10-year yield is now just on 4.25%, down 3 basis points from this time yesterday. And the price of gold will start today at $4,909 an ounce, and up another $66 from yesterday, and a new record again. Silver is up $2.50 an ounce at $96 an ounce, and also a record high. American oil prices are down $1 from yesterday at just on $59.50 a barrel, while the international Brent price is now just under $64 a barrel. And the Kiwi dollar is firmer from yesterday, up 50 basis points to 59 US cents as the US dollar is devalued in financial markets. Against the Aussie, we're little changed at 86.4 Australian cents. Against the euro, we're up 30 basis points at just on 50.3 euro cents. That all means our trade-weighted index starts today at just on 62.9 and up 40 basis points from yesterday, and its highest since late September. And the Bitcoin price starts today at $89,026, up 1.2% from yesterday. Volatility over the past 24 hours has been modest, though, at just on plus or minus 1.7%. Join us later this morning when we report on the New Zealand fourth quarter CPI result, which could set the scene for the RBNZ's decisions in 2026, the next one on February the 18th. Markets expect a 3% CPI rate, right at the top end of the central bank's policy comfort level. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again on Monday.